Well, hello, Amy. I'm thrilled to be here with you today. Talk about your work, the work at Blue Earth Capital, and all the good that you guys do in the world. While you're also, I have to say, giving your investors a pretty comfortable investment return.
Thank you, Rob. Excited to be here and excited to chat.
Maybe you could just take a minute there and just tell us where are you guys based,
Headquarters for Blue Earth Capital is in Zug, Switzerland, but I am personally based in New York City.
and where would you rather be right now?
Can I not choose the fifth? I'm very happy here in New York City on this fine May afternoon.
No trouble at all. And when did you guys launch both Blue Earth, the firm, and your specific strategy?
So Blue Earth was founded at the end of 2015. We were founded and incubated within Partners Group, and then we spun out and became Blue Earth in 2021. I joined as part of the founding team in 2016.
Excellent. And what do you guys manage now? What's your AUM?
We manage 1.5 billion in total AUM.
And that's in what strategy?
Those are across three different strategies: a private credit strategy, a private equity strategy, as well as a fund investment strategy, also known as the private equity partnerships strategy.
Got it. Are you having fun?
Every day, every day.
Even in this environment, I guess.
It it's more like a roller coaster, and sometimes those that are adventurous, we enjoy that.
That's a great answer. Can you, Amy, elaborate for everyone who's listening? Just tell us in a little more detail what exactly is the thesis behind Blue Earth, and then how do you guys execute on that thesis?
So Blue Earth was set up with really two things in mind. One, to intentionally improve the lives of those underserved and improve the outcomes for the planet while delivering a strong financial return for private market investors. And everything we do is earmarked towards that goal. We are a platform which allows us to deploy those three strategies as mentioned: private credit, private equity, and fund investments into fast growing businesses that operate at the intersection of impact and financial return.
So, Amy, I think I know you guys a little bit, and I would say lots of firms would make the claim that you just made. But you guys really are authentic in your pursuit of that dual sided strategy. Can you tell us a little bit more about both sides?
Yeah, and maybe before the both sides, I would just highlight one really core difference about the overall institution, which is really actually built into the ownership structure. So our ownership, and we're a fund, we're an asset manager like any other. We have a manager, we manage different funds. Those are managed in an effort to invest in resilient and impactful businesses while delivering financial returns. Fine, I'll get into that in a little bit. But all of this is actually owned by a foundation that is an independent foundation, the Blue Earth Capital Foundation, really keep or really speaking to the mission, which is to say that the profit that we generate from our business ventures is going to then incubate a ecosystem that is kind of closed, an ecosystem that allows us to capsulate further advancements into impact and philanthropy. So that difference in ownership, I think, speaks to the
Hmm.
commitment of Blue Earth Capital as well as the founders and how they thought about setting up this systematic change for impact.
So, Amy, that's a really fascinating structure, and I'd love to talk a little bit more about that in a bit. But can you start by just telling us about the history and the foundation of the firm and where you were and where you are now?
Great question. So the firm was started almost a decade ago by one of the co-founders of Partners Group. Partners Group, for those who are not aware, is a large Swiss private markets asset manager. They manage about 150 billion. They're listed on the Swiss stock exchange, and they've been very successful and powerful by operating as a platform, meaning they invest in different asset classes, credit, equity, etc. And this founder, he has done very well for himself as a result of this effort and decided to sign the Giving Pledge and convert all of his wealth into impact. As he decided to do this, he kind of took a look around and realized, oh, how do I actually do this responsibly? How do I do this well? He couldn't find a place to funnel his capital in an efficient and catalytic fashion. So he decided, because he's a business guy, let me build it. Let me take all the lessons learned I had in building this asset manager and transform that into something which is very similar in concept, diverse asset classes, private markets, market rate return, but intentionally gear this towards impact. And that was the original vision, which then allowed him to put all of his founding shares into the foundation, thus acknowledging how this ecosystem can be created, and then going out and telling us, the team, all right, now I built this. Go out and prove that this is possible. Go out, prove by raising money from other investors, by bringing along people into this journey. And the way that you bring them into the journey is by delivering strong impact, but strong financial return.
That is really a unique strategy and a unique form of business. Does it give you the leeway to perhaps do some things that not others might be able to do if they were owned exclusively, in the public markets, let's say?
There are two main advantages here. One, our ability to stay committed to our vision or mission, which is to deliver top quartile results while remaining confident that the way to do that is by embedding it with deep impact and sustainability. Impact, sustainability, returns, that takes time. It takes a journey, and it oftentimes is not completed on a quarterly schedule as it relates to public markets. It allows us to make long-term strategic decisions. This is the investment, this is our conviction, and we can wait a longer period of time. Furthermore, it also leaves us really shielded from the risk of someone buying us, saying, we're now, there have been a number of these where larger asset managers have purchased impact managers, which raises questions as to what that impact mission and how that impact mission will align to the broader platform. By having that foundation set up and that commitment, it ensures that the vision that we've set out with, that's what we have available to, or that's the pathway forward, and are really our only pathway forward. And secondly, and this is really a luxury, the fact that we have ERS and the foundation as our sponsor, we're able to test out new strategies. The conviction to understand that a new strategy may take some time to bring in external investors to come in. We understand that. So the foundation can sometimes seed some of our new programs and funds, which is really, really wonderful. Oftentimes the first dollar in is the hardest to raise. So
Mhm.
that's been very helpful over time.
And I would imagine the investors who come in with the second and third dollar are very well aligned with everything you just said. They understand what they're getting into.
100%. So
Yeah.
we've had a great evolution of investors. I will say mostly European, but strong support from Swiss and German family office foundations, and then increasingly over time, institutions. We've just recently onboarded our first Australian superannuation fund, our first Asian sovereign wealth fund, one of the big ones. So that conviction and being able to convince
Hmm.
some of the more originally aligned folks has allowed us to then build out track record and prove that the strategy works, then that helps us then corral in the slightly, yeah, larger and perhaps more disbelieving folks that are now believers.
I love it. I love it. Can you bring that maybe to life for us? Like, what was something you think you were able to do? And I know you've had a long career well before you joined, that maybe you couldn't have done somewhere else.
So uh, I'll speak about the platform
Mhm.
actually for what Blue Earth has been able to put together. Right now, actually, we are investing heavily in secondaries. Impact secondaries. This is the asset class which allows us to be able to, as investors, then pull in or provide liquidity to other fund investors who may be at the end of their investment period and
Mm,
require liquidity, or allow for companies that are a little bit just shy of exit, but then provide the additional last capital in to then support that overall journey towards an outsized
mhm,
return.
mhm,
And secondaries as a whole has been a relatively more nascent asset class in traditional markets. And impact secondaries, I mean, there really are no folks that work in this
mm,
space. But our sponsor, the support of the ability for him to see the potential opportunity to take that risk in a relatively newer, more nascent sector has allowed
mhm.
us to, in the last year, we've completed 15 different impact secondary investments. And now this year, we've launched a new impact secondary fund, actually.
Mm. I would imagine you're not doing that out of the goodness of your heart.
It's, I think the idea is that doing good for the business and for their ultimate consumers, it does well for the investors who
Sure,
support them as well.
sure. I'm sure it does. While we're on the subject of exits, how do you guys think about the end of the life of a commitment and your responsibility, if any, to the borrower at exit?
So I think that goes back to how we underwrite and how we align incentives at the onset of a partnership. And I say partnership, even though we're investing or providing credit or providing equity, ultimately we are acting as a capital partner to these companies. And we look for businesses where the not only is management aligned to us, and that's very important, management is aligned and wants to do better and answer all of our questions around sustainability and reporting, but also the activities, the business activities, what they do for making money is intrinsically a direct impact to something positive. So it's not to say that it's a CSR initiative or it is something nice on the marketing side. It is literally what they need to do to improve market share, improve margin. And by ensuring that there's that knit in the DNA of the impact objectives and the financial objectives really helps us mitigate some of the risks that you would potentially think about what the tensions are between financial and impact return, which then ultimately help come to a more natural, mutual beneficial result at exit. That said, at exit, we will always take a viewpoint as to what were our original objectives on an impact goal perspective in the ESMS, environmental social management programs. How has that performed relative to our original underwrite? And make an assessment on whether we're comfortable or not. And in most cases in our portfolio, that's not been a problem.
So you sort of feel like your responsibility does extend beyond just the deal itself, and it begins at the beginning of the deal.
It does.
Yeah. So let's pivot, if we can, to you, your colleagues, your team. One question that people always want to know is, what's your edge? I prefer to say, what is it that makes your team exceptional?
It's a good question. So if you look at the profile of my team members, you've got people that worked at Goldman, worked at SVB, worked at Deutsche Bank. The pedigrees look like what they would look like in any other investment credit firm. I think two main differences. One, you have folks that have intentionally decided, I want to do more. I am going to come here to this more emerging asset class and take on an entrepreneurial endeavor to prove out that not only am I going to deliver good returns, but I'm going to deliver impact. And that takes a different gumption in a person. And then secondly, so we invest globally. We invest in the US, yes, in Europe, yes, but we do a lot in emerging markets in Latin America, Southeast Asia. And for us to really be able to do business there and understand how to find the right opportunities, these folks, they come from the regions, they have worked in the regions, they have lived there, they have the ability to not just find the right deal, but the cultural nuance to actually shepherd that through and manage it. And that diversity of background and diversity of thought is really quite powerful.
It most certainly is, and I think it's one of those contentious, but to you and me and many others, just obvious statements that unfortunately not everyone seems to agree with.
The environment, I would say, for that comment has changed a bit in recent times. But going back to some of the secret sauce that I spoke about, that ability to remain dedicated to our conviction because of our ownership structure,
Hmm.
it allows us to. What maybe we'll be proven wrong. I don't think
Hmm.
we will, but over the last 10 years, we have been able to generate really strong financial returns. And the team that has done it, they are people who are from all different walks of life and parts of the world. So
Hmm.
there, I don't know if it's causation, correlation, etc., but those are the facts.
Well, there's a relationship. Let's leave it at that, right?
Yes.
Let's move a little bit into the real investment strategy itself. And you've got more than one, of course. But when you think about the financial returns that you're intending to deliver to your investors, I would imagine you face this question sometimes. Well, what's your concession to impact? So, what's your answer to that?
My answer is, and I will caveat and say that this is a very particular uh, ecosystem that in which I'm operating. I am operating in a world which is trying to prove that impact and financial return can exist and coexist without tension at a scalable fashion. Meaning, we are able to, our platform is over $1 billion, and the idea is for this platform to then continue to add AUM in the billions, which is to say that in order to do so, in order to achieve that scale and achieve those dollars funded to all these interesting businesses, we need to be able to deliver market rate returns. As a result, our communication to investors and our delivery to date is that of market rate returns. Now, I would just caveat to say this is also part of the luxury of how we've been crafted as an organization with our ownership structure. There are segments of impact that cannot be addressed with market rate returns. Example, disaster relief or certain really early stage portions of, I don't know, say water or water and sanitation. Those are really difficult to deliver the type of financial return that we're trying to seek. But that's why we have a foundation such that if if we do our jobs right, we generate more value that we can then dedicate and funnel into the foundation, and then the foundation, using their philanthropic capabilities, can then support these parts of the segment of the value chain that we wouldn't be able to touch from a profit for a market rate perspective.
Yeah, that's a thoughtful construct and a good answer. I always think that if I'm intentionally allocating capital to a strategy that has a return profile that is quote below market, that's not a concession. That's a conscious decision I've made as a catalytic investor.
Mm,
There's nothing concessionary about it at all. There's another part of my portfolio that is completely market rate, and there's another part of my portfolio that's completely philanthropic where I expect to get nothing back.
mhm.
There's absolutely no reason why those three ideas can't exist within a single construct.
100%. And also, I think it's what are you trying to get out of it as well? Because if I go think back to my days in business school, you're always talking about stakeholder engagement, et cetera, how to maximize shareholder value. And I always think it's not because what are you maximizing at what time period? I like to use
Mm,
the word optimize for the
sure.
long term because it is
Right.
about a portfolio approach of all of the different drivers and dimensions that we're speaking about.
That's right. That is so true. Let's pivot a little bit. I want to talk about our work together because it really was a moment in time for us that was very important, and you and your colleagues at Blue Earth were supportive, collaborative, and it was a great experience. I've sort of seeded you with the answer, I hope, but how would you describe the process of sort of working with us?
So I would like to first off say thank you for inviting us in the pilot. It was really wonderful to go and try to even test out our own impact capabilities and processes with it as you were developing your own impact authenticity and that framing around it. Because I would like to just say it's new, even though it's been around for this point over a decade. The tools and the framing still need to evolve, and it's these types of collaborations which allow us to do so. So thank you very much. Working with you guys as a team, easy peasy. It was super fluid, being able to deliver information, transform ideas into actions very easily, and we're excited to have completed it once. We did it on two funds, I believe, and so
Yes,
we're looking forward to as you roll out further tools to engage with our other products and maybe even do renewals and things like that.
that'll be dynamite. We welcome that and look forward to it for sure. Um, Pivoting a little bit to the industry itself. There is this moment we're in right now where there's a lot of discussion about the need for better measurement and accountability. Some say yes, some say it's a burden. How do you feel about that?
I think that it's hard to, or rather, it's difficult to say you're successful at something without being able to measure what it is that you're trying to be successful in. So, with financial return, fine, the return of capital multiple, okay. But even that, like people can calculate IRRs in different ways, and so there's enough nuance there. The world of impact, the world of impact KPIs and goals associated with sustainability and impact, there is a need for this. Otherwise, we're just we're never going to be able to actually say that we are doing good. Whether the tools are fully there, I think I answered it before. Basically, we're not there yet, but it's these efforts and collaborations that help us, or rather, help push us in that direction.
Yeah, well, we certainly agree. No doubt about that. And I think it is a useful and helpful and in many cases necessary direction. What do you think about the way that the industry approaches measurement and the tools that are used for measurement today? Is there anything that you would say was working well or needs improvement, enhancement?
So I think frameworks in particular. There are a few frameworks that are very helpful as
Hmm.
they look to guide practitioners on different dimensions of the factors of impact. For instance, the impact management project, they have the who, what, how much of impact, which allow and that the guidance around it has been really great because we've actually taken that and created a tool, a proprietary tool that has codified different barriers to get us to a specific metric and a score. So things like that have been particularly helpful. What's been challenging, and also actually one of the reasons why it's helpful is because it is adaptable across different asset classes and different sectors. What is difficult is some of the more regulatorily driven
Mm-hmm.
um, initiatives, which may be very robust for one particular segment of the world, but very difficult to extrapolate to others. And
Mm-hmm.
I'll just say it, one of those examples would be the EU FSDR, that set of regulations around what are green and what are social funds are very much geared towards funds that are more private equity oriented and much larger scale in nature, which can
Mm-hmm.
make it difficult to translate to different strategies. So it's
Mm-hmm.
just being able to use the right platform across just a really emerging cohort of impact managers.
Yeah, we would definitely agree. and it's one of the reasons we like to say frequently, what we're really doing is judging you on what you said you were going to do. Obviously, we have standards, right? And those standards matter. But ultimately, we want to give investors reassurance that the things you claim you're doing in your marketing material, in your prospectus, they can have some assurance that you're actually aiming to achieve that and then ultimately are achieving that. That's the really important part, I think. And I really liked your comment there about sort of the rationality of certain frameworks in the regulatory space. Because there are certain issues that just don't apply across asset classes, nor do they apply across sort of the life cycle of an investment fund. A young manager has very different capabilities than you guys have,
Mhm.
and they shouldn't be told that they're insufficient just because they started last year.
Yes. 100%.
Everybody,
100%.
basically everybody needs a shot at success.
Indeed.
Yeah. So, is there anything else you want to say, add, contribute, think we've missed?
Mm, only that I think, particularly now with the sentiment as it is,
Hmm.
it's doubly important for those that have the luxury, and I'll say that the luxury of being able to be vocal, to be a bit louder about what is important, what their conviction is, and yeah, offer that as a cove, if you will, amongst the hurricane.
Yes, I totally agree. I totally agree. Well,
So
thank you,
working
Amy.
with folks like you is exactly that, and we're happy that we're on the little sheltered cove island together.
Well, thank you, Amy. I hope we didn't give you too many headwinds.
No, 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 not at all.
So, can we engage in a little bit of a speed round here?
Okay.
You didn't get these questions, but I think you'll find them
Oh,
pretty easy.
okay.
So, favorite food that you can't make at home?
Oh, this is easy. I like sushi.
It's a very popular answer. Favorite food that you do make at home?
So my background is my parents are from Taiwan. There's a meat noodle dish, jjiangmian, that my kids love. I love. Mm,
Excellent.
yeah.
Favorite musician?
Oh my goodness. The first one that comes to mind, and is this kind of embarrassing, is Taylor Swift.
Oh, hey, nothing wrong with that.
Yeah.
It's funny.
Now I'm embarrassed.
Oh,
But
don't be. Don't be. Favorite sports team?
this
Careful.
is a trick question. This is a trick question. I will say then my kids' favorite sports team is indeed the Celtics.
Yes. Thank you, Amy. This has been a real treat.
Thank you, Rob. It's always a pleasure.